Now speaking, Andrew Whitty, Chief Executive Officer. Thank you for joining us today. Our second quarter performance reflects the capabilities, agility, and dedication of our people as they responded to the changes in the healthcare environment. Revenue growth in the quarter was strong and well-balanced across our enterprise, increasing by more than $12 billion to nearly $93 billion. OptumHealth saw an increase of more than 900,000 patients under fully accountable value-based care arrangements. OptumRx and OptumInsight revenue grew double digits on expanded capabilities and products. UnitedHealthcare's growth was strong and diversified, serving nearly 1.6 million more people in our commercial and public sector program offerings than we did last year. This enabled us to achieve second quarter adjusted earnings per share of $6.14 and to strengthen our full-year outlook to between $24.70 to $25 per share. We observed increased care patterns, notably in outpatient surgeries for seniors and especially with certain orthopedic procedures which may have been postponed. We are also seeing increased care activity in behavioral care, with the percentage of people accessing services increasing by double digits since last year. To address the issue, OptumHealth has expanded its network by tens of thousands of care professionals this year. Research has found that patients who received our in-home preventative wellness assessments compared with those who hadn't made fewer emergency department visits and spent fewer nights in hospitals across 4 common conditions. We are confident that next year, we will again grow at a pace exceeding that of the broader market. We are focusing on affordability, transparency, and simplicity for the people we serve. Now speaking, Dirk McMahon, President and Chief Operating Officer. Thanks, Andrew. Our goal is to make high-quality care more affordable and accessible for everyone. We are working hard to lower out-of-pocket costs and drive greater affordability throughout the system. We have seen an uptick in outpatient surgeries, and evidence shows that comparable procedures performed in ambulatory surgery centers cost about half as much as traditional settings with comparable outcomes. This translates into hundreds of dollars in out-of-pocket cost savings for consumers. We are also leaning in to lower the cost of prescription drugs. Our customers count on us to help them access the most effective medicines at the lowest possible cost. We provide tools to help consumers navigate their options and find the best value for their prescriptions. Our Price Edge feature has already delivered millions of dollars in consumer out-of-pocket savings. We are also focusing on specialty drug costs, offering tailored programs with individualized, single point of contact care for rare diseases and clinical excellence programs for conditions such as MS, autoimmune diseases, and cancer. We are also helping drive affordability and consumer choice by offering biosimilars at parity. We recently began offering Amedisys, a biosimilar to Humira at parity, and we have added 2 new Humira biosimilars, Siltezo and Hyrimoz, to our standard prescription drug list also at parity. We have also implemented a program to offer life-saving drugs at no cost to our customers, which has been adopted by more than 500 of our self-funded customers. Finally, we have rolled out our integrated card, which enables seamless access to benefits, programs, and rewards for more than 13 million consumers. This has resulted in increased adoption and satisfaction levels, making it simpler for seniors to navigate the system and understand their benefits. These initiatives are resonating with our customers and are a key reason for our continued growth in a highly competitive environment. Now speaking, John Rex, Executive Vice President, Chief Financial Officer. Thank you. Adaptability and delivering greater value for the people we serve continue to be foundational elements for our enterprise. We have identified evolving market trends, moved quickly to help people get the care they need, incorporated our broad and multifaceted insights into planning, and delivered on our commitments to shareholders. We are confident in achieving our goals for 23 and looking toward 24 and beyond. In the second quarter, outpatient care activity among seniors was a few hundred basis points above our expectations, with specific orthopedic and cardiac procedures far exceeding that level. We assume these levels of heightened care activity will persist throughout next year. Care activity among our Medicaid and commercial populations is consistent with our expectations. We continue to intensely analyze trends that may indicate more severe disease progression. Revenue of $92.9 billion grew by 16% over the prior year, with double-digit growth at both Optum and UnitedHealthcare. Operating margins reflect the higher care activity patterns. OptumHealth revenues grew 36%, OptumRx 15%, and OptumInsight 42%. The revenue backlog reached over $31 billion. UnitedHealthcare added nearly 500,000 people in the first half and continues its growth with the 24 selling season indications tracking favorably. We expect growth of over 900,000 Medicare Advantage members this year and our Medicaid performance remains strong. Adjusted cash flows from operations were at $10.4 billion or nearly 2 times net income in the second quarter and $15.6 billion or nearly 1.4 times net income in the first half. We returned $8.3 billion to shareholders through dividends and share repurchases. We strengthened and narrowed our full-year 23 adjusted earnings outlook to a range of $24.70 to $25 per share, with a relatively balanced pacing in the second half. Now speaking, Andrew Whitty, Chief Executive Officer. Thank you. UnitedHealth Group is confident that their planning decisions will enable them to sustain the growth momentum they have seen in the first half of the year and continue to demonstrate their adaptability, performance, and mission-driven purpose. We are now open for questions, one per caller. Credit Suisse analyst A.J. Rice inquired, what is the impact of senior utilization on OptumHealth's margins? Andrew Whitty replied, A.J., thanks for the question. I'm pleased with OptumHealth's performance, especially the growth of patients in value-based arrangements, which is now at 4 million. The margin compression during the quarter is due to a few dynamics: senior trend, strong growth in behavioral, and the influx of complex patients. We're investing in helping those patients manage their care better, which puts pressure on the margin in the short run, but it's laying a strong foundation for the future. We're leaning into that growth assertively. JP Morgan Chase & Company analyst Lisa Gill inquired, what is the upper end of the full-year MLR and how much of that is driven by MA outpatient and behavioral utilization? What population is driving the behavioral utilization and what percentage of costs does it represent? Andrew Whitty replied, John, could you provide Lisa with some context around the balance between senior and behavioral care? John Rex replied, good morning, Lisa. In response to your question, the majority of our guidance for the full year is driven by the increased care activity we're seeing among seniors in outpatient settings. We've seen a very significant increase in the number of people accessing care since last year, and we anticipate that trend continuing. This is especially true within OptumHealth's behavioral health services. We don't see any reason why this trend should slow down, so we're designing our benefits accordingly. Wyatt Decker replied, absolutely. Thank you, Lisa. We're seeing an increase in utilization of behavioral healthcare services across all age groups. We're seeing 30, 40, 50-year-olds accessing care for conditions like anxiety, depression, and substance use disorder. To ensure our members have access to the care they need, we've expanded our behavioral healthcare network and launched a provider services program with ambulatory services in 37 states and self-paced modules for anxiety and depression. We also provide therapists, as needed. We'll continue to make sure our members have access to the care they need and provide innovative, scalable solutions for their behavioral healthcare needs. Andrew Whitty replied, yes, Wyatt. Thank you. Lisa, you've identified the key trend here. OptumHealth's behavioral services are a major part of this. We're committed to providing the care Wyatt described in detail. Who's next? Goldman Sachs analyst Nathan Rich inquired, John, could you discuss your expectations for MCR between 3Q and 4Q and how you're viewing care activity trends in the back half of the year? Are there differences in demand and supply bottlenecks between Medicare, commercial, and Medicaid lines of business? John Rex replied, Nate, good morning. Thanks for the question. In terms of the balance pacing, we expect MCR to be lower in 3Q than 2Q due to seasonality. We anticipate earnings to be marginally higher in 3Q than 4Q. MCR should be between 1Q and 2Q levels. Care activity across the company has remained stable and our expectation is that it will continue at those levels. We are seeing a few hundred basis points above our expectations in the senior business, which should continue in the second half of the year. Wolfe Research analyst Justin Lake inquired, can you tell us how Q2 commercial trend emerged versus Q1 and Q4? Is outpatient a pressure in the commercial components? Andrew Whitty replied, Justin, thank you for your question. We anticipated some unit cost inflation at the start of the year and we have seen that come through. Everything is tracking within our expectations and we feel good about our current position. Next question. Nephron research analyst Josh Raskin inquired, do you think the increased utilization on the MA side was due to augmented benefits in the last 2 years? How did you address utilization trends in your benefit designs for 24? Andrew Whitty replied, Josh, thank you for your question. It appears that the benefits are not driving this shift in outpatient care. Rather, it appears to be a deferment of care due to the concentration of outpatients, particularly in orthopedics. We have seen a change in the fraction of people who, once recommended for surgery, actually go through with it. This could be due to an increase in supply and/or a decrease in individuals' reluctance to enter a facility post-COVID. Tim, would you like to add anything? Tim Knoll replied, thanks, Joshua. Our analysis of potential drivers, such as acuity and benefits added to our membership mix, is tracking in line with expectations. The more important driver for our benefit decisions this year was the changes to the risk model. We are confident in our ability to provide stability to the benefits seniors value most, such as zero copays for primary care visits, zero copays for Tier 1 drugs, zero monthly plan premiums, and level out-of-pocket maximums. Combined with our strong value proposition, partnerships, and confidence from the broker community, we feel good about the benefits we filed and anticipate great growth results next year. AllianceBernstein analyst Lance Wilkes inquired, what trends are you seeing in Medicaid redetermination and membership recapture? Are there any opportunities for growth or attrition due to economic weakness? Andrew Whitty replied, thanks, Lance, for your question. Our commercial business is performing very well this year and is setting up for a strong 24 season. We've seen great growth in membership, driven by product innovation from our team. I'll hand it over to Dan Keeter, who looks after our E&I business, to answer your specific questions. Dan Keeter replied, Lance, growth is on track for the full year. We experienced a contraction in our fee-based business due to one large customer. The outcome of attrition and redeterminations will determine where we fall within our range, but we are still on track to hit our range for this year. Andrew Whitty replied, thanks, Dan. Thanks, Lance, for the question. We anticipated the client loss about a year ago and it was within our expectations and forecast plan. It has no impact on our full-year expectation. Next question, please. Bank of America Merrill Lynch analyst Kevin Fishbeck inquired, how can OptumHealth margin normalization be achieved over the next couple of years? Is it within your control or is it dependent on how other providers price? Andrew Whitty replied, thanks, Kevin. The pressure we're seeing is coming from three sources: the senior trend phenomenon, Optum's focus on behavioral health, and growth in our book of business. We're seeing a complex care patient base, which is a positive element of our growth going forward. We'll continue to lean into that growth and expect margins to strengthen, particularly in 24. We believe our pricing for next year reflects this. The longer we can look after patients and provide wraparound care, the better outcomes we can deliver and the more sustainable our capability will be. We feel good about the range we've laid out for OptumHealth over the next several years. I'd take the growth over a slightly suppressed margin in Q2 any day. Appreciate the question, Kevin. Next question. Cohen & Company analyst Gary Taylor inquired, could you discuss the levers and offsets that allowed for higher MLR and lower margin in OptumHealth, as well as the investment income in G&A that contributed to the stronger quarter? How much of this is expected to carry into 2024? John Rex replied, good morning, Gary. It's John. Investment income has been growing steadily over the past few quarters due to a rising interest rate environment and active management of our treasury teams. We've seen gains from our fixed income investments and venture holdings, though these are not always predictable. We don't count on them every quarter, but they are elements we've seen over time. Andrew Whitty replied, thanks, John. Dirk, can you provide some insight into the work you're leading around technology and other interventions to drive down G&A costs? Dirk McMahon replied, I'm excited about the potential of AI, machine learning, and natural language processing to improve our healthcare services. We're already using these technologies to optimize our provider search, detect waste, fraud, and abuse, and answer basic questions in our call centers. We're also leveraging our benefit bots to reduce the number of calls and labor associated with simple questions. In the long term, I'm optimistic about our ability to use our data sets to take advantage of new technology and further improve healthcare. Andrew Whitty replied, thanks Dirk and Gary. We saw a movement in care activity in the quarter, and we responded quickly with a range of levers within the organization. We're continuing to invest in growth and patient care, while also bearing down on our core operating costs. This is how we create sustainable shareholder value. Next question. Deutsche Bank analyst George Hill inquired, John, what data do you have that leads you to expect the current elevated trend to continue in 2024? What drives your visibility into the future? Andrew Whitty replied, thanks, George. I'm happy to provide some insight into our Medicare business. We've seen a steady increase in revenue over the. Tim Knoll replied, thanks, George, for the question. Our biggest focus this year has been on risk model changes. We've incorporated the latest data into our Medicare Advantage bids, which is essential for both revenue and medical elements. We designed a nimble bid process to accommodate late changes. We assumed that the early indications we saw in outpatient care patterns would remain durable, and so far they have. We feel confident that our 2024 bids have taken all of this into account. Stephens Incorporated analyst Scott Fidel inquired, could you please discuss the strategy for increasing exposure to Amedisys and the potential synergies from integrating it with LHCG? Andrew Whitty replied, Scott, thank you for your question. We are pleased to have reached an agreement with Amedisys and are in the early stages of the process. We strongly believe that home health capabilities, when combined with other care activities, are essential for value-based care, especially for complex patients who may have difficulty leaving their homes or lack a strong relationship with a clinic. We will provide updates as we progress through the regular process, but there is nothing more to share at this time. We are confident in our ability to continue to perform and grow while pursuing our mission and building a foundation for growth in 2024. We look forward to sharing more in October. Thank you for joining us.